Hello, everybody. Welcome to the evening crypto report. I am your host, Winklefloss Nakamoto. Tonight's evening report will deal with a breakdown on what security tokens are and why regulators are after them. So let's get right to it. A legal view on ICO. What are security tokens and why regulators are after them? Albeit security tokens seem to be a more attractive investment than utility tokens, as they give token holders some specific rights regarding the issuer company, e.g. voting rights, profit-sharing rights, a stake in the share capital, etc. Just up front, this is not financial advice, and I am not a financial advisor. We're just talking about changes in the Bitcoin and crypto market. And here we go. Albeit securities tokens' attractiveness, the legal model of the offering constitutes additional risks related to securities legislation. In their new post, Lawless.tech, a channel devoted to covering the ongoing regulatory attempts to oversee and control the newest technologies, explains what are those risks and why, after all, the regulators of the world are so cautious about these kinds of tokens. A closer look at the Howey test. If a company plans to make a real securities offering, the Lawless team writes, it has to meet strict statutory requirements in most jurisdictions. The securities legislation in the United States, for instance, is based on the following concept. All investors, whether large institutions or private individuals, should have access to certain basic facts about the investment prior to buying it, so long as they hold it. Thereby, the SEC, as a securities market regulator, will carry out all actions that it would deem necessary to protect U.S. investors and the securities market in general. Projects which sell tokens to the U.S. citizens should play it safe, just not to violate the securities laws. Otherwise, the ICO may be halted, projects may be fined, and in some cases, founders can get a prison sentence. Thus, it's fairly important to keep in line with the laws and abide by all rules regarding the securities offering. The tool that can help one avoid problems is called the Howey test. As the Lawless.tech team puts it, the Howey test determines whether a financial instrument is a security or not. The test consists of 4 components, all of which have to be met to define a token as a security in the U.S. These 4 components are investment of money in a common enterprise with a reasonable expectation of profits to be derived from the entrepreneurial or managerial efforts of others. Let me repeat that. 1. An investment of money. 2. In a common enterprise. 3. With a reasonable expectation of profits. 4. To be derived from the entrepreneurial or managerial efforts of others. An investment of money states that the project's tokens are being sold for money. The judicial practice suggests that the investment of money doesn't necessarily mean cash. The SEC clearly stated that in spite of Howey's reference to an investment of money, it is well established that cash is not the only form of contribution or investment that will create an investment contract. Thereby, tokens purchased for Bitcoin or ETH meet this requirement, and nearly any token sale is an investment of money since it's a sale. A tokenized system may be considered a common enterprise if the reward for any kind of effort contributed to the system, such as mining, has influence on other participants' rewards. Any tokenized system involving efforts of their token holders to update and enhance the system is likely to be deemed a common enterprise. Moreover, a system may be treated as a common enterprise when an individual contributor's profits depend on the issuer's expertise. In turn, the post goes on, the 3rd component stipulates that an investment should be made with a reasonable expectation of profits. It is important to note that what the SEC means here is the expectations of the project's investors, not the project's team. If investors or contributors purchase tokens expecting to sell them later for profit or hold them to get periodic payments, authorities will have the grounds to qualify said tokens as securities. The last component states the investors expect their profits to be derived from the entrepreneurial or managerial efforts of others, meaning that investors expect a well-known team or a team member to develop a product that eventually generates the profit. The SEC points out the central issue as whether the efforts made by those other than the investor are the undeniably significant ones, those essential managerial efforts which affect the failure or success of the enterprise. So the best way to avoid meeting this criterion is to give investors a right or an option to take part in the final product development, offer advice, comment on the development, vote for changes, etc. In the case of an ICO, a project may allow its contributors to help develop an open source code or search bugs and exploits, so its success would depend on investors' contributors' efforts as well. Only in case the token meets all four criteria, the Lawless Tech team concludes, the SEC will qualify it as a security, therefore forcing the issuer to comply with the existing securities legislation. This post, A Legal View on ICO, What are Securities Tokens and Why Regulators are After Them, appeared first on btcmanager.com. That's btcmanager.com if you want to read this full article. So, in conclusion, an offering of securities tokens requires meticulous preparations and good lawyers on the project side, as it's fairly important not to violate the existing securities legislation. Best practices are to use various legislative exemptions that allow one to offer securities or obtain all required licenses. Still, the latter approach suggests that one uses a complicated corporate structure which is likely to require a large amount of money. That's the end of the article. Thanks for listening and watching. Please like, subscribe below, or share it below. Helps us get more views, and we certainly do appreciate it. Please comment on this below as well. Thanks so much for listening. Have a great evening. This is Winklefloss Nakamoto. I'm out. My baby. My baby Q. You're such a good girl. My little girl. My little baby girl. I don't remember setting that up.